Very few things are more likely to set traders' hearts aflutter than some sort of perturbation in the price of gold. This is particularly true here in Australia, where we do seem to have a very unseemly association with this strange little metal. So with gold displaying some sort of activity, I thought I would have a look at what is happening and in turn what possible opportunities this might present, if any. So there is the caveat in there of if any, and that's very, very important. The unfortunate thing with instruments such as gold is that traders tend to go on emotion rather than the practicalities of what is actually occurring. And so you need to be ever mindful of that when making your decision. And I'll have a quick look at decision-making processes at the end. But it is worth looking at what has got people so excited. And what has attracted attention is this little pop on Friday night that you can see towards the end of this band of consolidation that has been going on for about the past 4 months. But as with everything in trading, we actually need to take a step back and take a longer-term view to see whether this sits within the context of what is happening. And if we look at a longer-term chart of gold, we see something interesting. We see that gold hasn't been consolidating for 4 months. It's been consolidating for 4 years. And this does tend to be the pattern of gold. Irrespective of what people tell you, gold seems to have a very poor propensity to trend. So therefore, as an instrument to trade, it is in many ways suboptimal, and you do need to look for analogues that may benefit from the spin-off and excitement that gold generates. To further ram home this point, this is a chart of gold going back to 1970, and I've also plotted the drawdowns down the bottom. You can see multi-decade bear markets in gold. Unfortunately, when you see charts of gold produced by gold bugs, they do tend to manipulate the chart a little bit to give it the impression that gold continuously goes up. No, it doesn't. For example, if you had traded gold in 1980, you would have had to wait till about 2008, 2010 to get your money back from trading the physical commodity. The same occurred in the early part of the 21st century. If you'd bought gold 2012, you'd only just be getting your money back now. And so we need to be mindful of that, and we need to work out how that when gold does move, that we actually take advantage of it. What I've done with this little table, and I've noted the source down the bottom, and I'll talk about List Corp a little bit more in a moment, is I've taken a group of domestic gold miners and producers, and I've set a cut-off of market cap of $200 million. I've then ordered them by price. And so you can see the top P&R has a closing price of 4 cents and a market cap of $213 million. You can see down the bottom that Northern Star, Newmont are enormous multi-billion-dollar stocks, but they're also very expensive. When we're presented with a list like this, and some form of mechanism of managing the information we receive, we have to order it in a way that makes sense. And we also have to order it in a way that, in some way, shape or form, enhances our chance of survival. One of the great problems here in Australia with gold stocks is most, to use a technical term, are shit. They are run by, again a technical term, dodgy bastards. All they are simple pump and dump schemes. So many of these small stocks you see with tiny market caps need to be avoided. Yes, I do understand the attraction. People seem to think that what they'll do is they'll buy this very dodgy stock at 0.1 of a cent and it will go to $15. And it's not the reality of the way the world works. And you need to be aware of that. So what I did with this list is I applied a long-term filter to it. And I said, which of these stocks are above my long-term filter? That is a filter based upon weekly data, and I'll talk about why I use weekly data in a moment. And as you can see, it's a very mixed bag. Some are above, some are below. Some have been really quite poor performers. Most, by and large, of the larger ones reflect the price of gold. So they've been going sideways and down for a period of time. And this is the first step in this notion of information management. You have to manage the information because unfortunately you will be, particularly with an instrument like gold, bombarded by all sorts of bits and pieces. There'll be all sorts of nonsense coming your way about what you should and shouldn't buy. You have to find a mechanism of ordering it. And it could be a mechanism like this using a service such as ListCorp. I should mention these lists are free. You can get hold of them without their subscription service. And in terms of managing information, I mentioned ListCorp. The other one you can look at is Market Index. Market Index breaks down Australian stocks as well into what commodity grouping they belong to. I find it a very, very useful little website to visit every now and again. You may be fortunate enough to have a data provider who will create custom folders for you and break various stocks down into their various ASX denoted indices, sub-indices, sectors and the like. And that does make the job easier. But this is a dumb list. It is up to you to build some sort of liquidity filter into it so that you don't get yourself caught in a position that you can't get out of. So in terms of managing information, you need a very mechanical way of doing it. But the information management has several steps to it. And paramount in that is making certain that you can not only get into a stock, but you can also get out. Because in trading, getting out is the most important point. That's the one decision you have that is the arbiter of how much you make or lose. And so therefore it is the most important decision you will make. Any idiot can buy a stock. It takes a professional to know when to actually sell one. The second point you need to do is choose a time frame. You might instantly think that the shorter the time frame, the better, because that's the way we've been educated. And that's the way the mythology of markets work, this notion that you must be constantly trading all the time and trading the shortest possible time frame to make as much money as possible. And you'll often see nonsense that appears, particularly on social media, produced by people who say, look, I make 1% a day. And you think, well, how hard could that be? It's actually so hard it doesn't happen. I'll offer a dogmatic observation. The shorter the time frame you choose, the less chance you have of making money. That's been my observation over the years. As such, even for speculative stocks, I pick a weekly time frame. And you might say, well, why? Well, for really simple reasons. This is de grey mining. It first broke out after years of consolidation at the 15-cent range. It then made its way to terminal price of about $1.60. That's a single decision. Yes, I know what people who are addicted to short-term trading will say. They say, well, I would have bought it at 15 and sold it at 20. And then I would have bought it back at 21 and sold it at 25. No, you wouldn't. You would have bought it at 25 and sold it at 22 and gone home. Because that's the way this tends to work for people. But you need to create a rationale for buying something. And this is very, very difficult for people. It is hard for people to generate some sort of logical schematic as to why they might do something, to somehow codify their actions into a set format. And as I mentioned, my code for these stocks is very simple. A breakout to a new high, preferably from long-term consolidation, under volume. Buy the stock, set the stop, go away. Do nothing else. Don't draw more lines on the chart. Don't sit there watching the price every day. Don't collect information. Don't go on forums. Buy the stock, set the stop, go away. But before you buy the stock, you have to ask yourself the question, why should I buy this? And this question acts as an interrupter gear. It causes you to pause. There is no differential in buying a weekly stock as to whether you buy it on Monday or Tuesday. So you can spend all Monday going, does it fit my rules? Or I will go away, think about it, come back, and with fresh eyes see whether it fits my rules or whether I'm trying to force it to fit the rules. And that little pause is immensely important in trading. It gives you time to think, but it also gives you time for your emotions to calm down. I should mention, and it should go without saying, that Twitter is not a reason to buy something. I understand the desperate desire of people to be told what to do, but in trading you have to think. It's your money, do your thinking. And the most important consideration, stay or go. And this is the key decision in all trading, because it is the dividing line between making money and not making money. Poor traders stay when they should go. Poor traders also go when they should stay. The key to making money out of trends such as we see in De Grey, and which we saw in the lithium stocks, which we saw in stocks like Chalice, is simply to stay. It is to sit on your hands and do nothing, and then go when the system tells you to go. But if I were to come back to a summary point, and I probably could have summed this entire video up with this chart, what will decide whether gold stocks run or not is whether gold breaks out of this extended period of consolidation, nothing else. So this is the thing that is important to you as a trader. This is the key to your decision making as to whether you should even go any further and investigate the notion of gold stocks. Because at the end of the day, gold stocks are related to an underlying commodity. Yes, the strength of that relationship does vary based upon whether they are hedged or unhedged. It to a degree also varies based upon the stage in which they sit in terms of exploration versus production. But if we put all those to one side, the thing that is most important to you is what is the price of the underlying and what is it doing.
Don't forget to like the video and subscribe to our channel so we can keep bringing you new and unique content.